Good afternoon, everybody. It's 12:40 p.m. Today's date is 7/14/2012. We have LinkedIn. It's a weekly chart, and we're right back up here. On this weekly high was 202.91, where we were shorting that high and we said there was going to be a correction. So it goes from 202.91 to this particular low in the short term on a weekly chart, which was 170. It dropped over $20. We had a rebound, but we made a lower. Now we made this high was lower on 5/13. The high was 192, and that next weekly reversal had come back down to the same areas, 170.8. But we can see how the weekly got down to the low. So we want to take this number here on 6/3 and take the low of 160.2, and then that massive rally going up to the high of 201.67. That is a $41 move in a 3-week breakout with a much more intensity level of a breakout than any other time of the calendar year. And that was a big sell down. Remember that we sold all the way from 202.90 to the low of 160, and that was done on 6/3. So from 160 right back up to 200. That's how mathematical sound that is. One of the things that we're going to be looking at is how to short the upper end of the move. It's going into a major catalyst earnings report. Here's what a daily looks like. 100% overbought, filling in that daily gap up there. Let's take a look at the 60-minute time frame on Friday. It just shot straight from 195. Every pullback to 197. We broke the highs, we pulled back, and we closed at 199.60. The stock is grossly overbought in the short term. It's going to have to answer to when it reports its quarterly earnings. We're given a quarterly preview that right now, if you've been owning LinkedIn, like some people have, it's time to sell into the rallies, not hold it. The contracts that we're going to trade is going to be a 726 contract for the following. We have plenty of time to make money on it because they report the calendar quarterly earnings on August 1st after the closing bell, LinkedIn. So we'll be looking at short-term trading, the put options over here. We'll be looking at the $200 puts. That's one of them that we're going to look at. Short-term for the monthly expiration. They are totally deflated. We can see where the contracts were way up here around the $12 range. They've gone straight down on the put side for the last several weeks. That means there's going to be we'll take a look here at the $205 put that's in the money, but look at the deflated values, and let's take a look at some of these on a daily level. They've gone straight down here to $6.70 to the low. The previous day they were close to $11.80, but they went from $36 a contract on the put side on 6/24 straight down. This is the side that we're going to be looking at because I can tell you right now that the call side is totally inflated. It reports its earnings on 8/1, so we're going to take a look at a 185 put well below the market that was up here. It's a weekly contract. They marked these down to $4.90. Over 100% premium has been taken out of it because the high was on that day 872. So almost 100% in my view. I mean, they've been cut in half anyway. So we're going to set alarms on that one. That's going to be a weekly 8/2 contract. Some of the other ones that we're going to look at, shorter term, I've already talked about the 195 put. Depending on how this trades, it's $3.15 on the low. They were up here at 7.25. Yes, it is below and out of the money monthly put on LinkedIn that we're going to be taking a look at. I'm going to show the MMT traders what the 180 call where it broke out so that we have a clear vision as to how these weeklies have went from $14 to exactly, and this is a 180 call in the money, and it's a 726 expiration. They've gone clear up to $21. Now, for the monthly regular, I'll show the same 180 call that's inflated in price, MMTs. They've gone from $2 to $20. That means that there's a big upset. You see, I'm going to rest my case. Every time the calls get inflated up here, they come straight down in value. Every time they pop up and they're still inflated, they come straight down in value. Short-term inflated, they came back down. Now look at the contracts. They've had an $18 gain in the 180 call in the money. That's what in the money looks like. Let's look at another call, 190, where these contracts were down here at roughly 88 cents, and they've gone clear up to $10.70. That's a 190 call in the money. If you take a look, MMT, and this is how to do puts and calls, you're always wanting to look at buying the 190 put over here. It's only 79 cents. If LinkedIn was to trade down, these are very cheap, so we would look at how LinkedIn would have to pull back $7 or $8 over the next few trading days to get an entry here, and these are totally deflated. $28 down to 79 cents. That is exactly a 195 regular put. That's the regular put. The 200, which is slightly a little bit out of the money, once again, the $200 put is at 375. This is the one that we're really going to focus on, is the 200 and the $205 put in the monthly expiration, and what they look like, and why did the calls get too inflated, and why did these put options are down here at 6.7. So they were $34 up here. We're going to look at trading that 205 put in the money based on LinkedIn hitting the wall of 50, almost a 52-week high. But if it does make a 52-week high, it could go higher. That's why we're going to use the $205 put in the money, and we'll price them all out. We are overbought. This is a big trade about to happen, and we've set it up. We know what side of the market that we're looking for, and we also know that on a 60-minute level, it does like to sell down. Bam. Straight down at the highs. And of course, it's all very short-term trading on how to trade the deflated put options and walk away with the game with an overbought LinkedIn stock on a daily and weekly chart.